Hi, I'm David Marchant, the founder of OffshoreAlert, which investigates participants in high-value cross-border finance with an emphasis on high-confidentiality jurisdictions. Our specialty is exposing investment fraud while it's in progress. Enjoy our content.
Well, good afternoon and welcome to this session, which is on Donald Trump's tax returns. I'm David K. Johnston. I have covered Donald Trump since the late 1980s. I've written 2 books about him, and I have another book about him coming up next year. I am not a lawyer, but I have been teaching law at Syracuse University College of Law since 2009. I'm a Pulitzer Prize-winning investigative reporter, formerly with the New York Times, and I'm the former president of Investigative Reporters and Editors. And Dan?
Well, that's pretty much impossible to follow up, but my name is Dan Alexander. I'm a senior editor at Forbes magazine, and I've been covering Donald Trump not as long as David, but since he became president, focusing on his finances. And I just released a book called White House Inc., How Donald Trump Turned the Presidency into a Business.
All right, so we're going to go to my presentation. And Dan's book, by the way, which I've read, is a superb and easy to understand examination of Donald Trump's finances. So if we can get my presentation up here, there we go, my opening page on it. And how do I get the next page to go? My button to put up the next page seems to have disappeared, guys, for this presentation. Okay, so 3 years ago, 3.5 years ago, at DC Report, the nonprofit news organization that I run, we broke the story of Donald Trump's 2005 income tax return. I was in Palm Beach, standing on a beach, shooting a photo with my iPhone of Mar-a-Lago with Glenn Zeitz, a longtime former mob lawyer who had also tangled with Donald Trump, standing behind me when I got a message that in the mail we had received at my house in Rochester, New York, the summary pages of Donald Trump's tax return. And what it showed, if we go to the next page, there we go, is this important data on page 2, and go to the next page, and I've circled what we're going to talk about here first. You'll notice that his taxable income was only $31 million out of $153 million. That's because of peculiar rules in the tax code that Congress enacted years ago, took out of the tax code in the 1986 Tax Reform Act, and then at the urging of Donald Trump, among others, but most prominently Donald Trump, put back in tax rules that allow full-time real estate professionals to take unlimited deductions on paper losses, notably depreciation from their buildings, against their other income, salaries, stock market dividends and gains, business profits from elsewhere. And Trump, by manipulating this system, and the DC Report article, which you can go to our website and read, details how he did this. In effect, Donald Trump deducted losses that were already deducted by bankers he didn't pay back in 1990 when he went through a private equivalent of a bankruptcy proceeding. And back at that time, Donald told me one day he was worth $3 billion. Later in the day, he said to someone else he was worth $5 billion. In other words, he just makes this stuff up as to his income. Now, you'll notice right below taxable income, which he'd reduced from $153 million down to $31 million, is the next line on this form. And you notice that his tax was actually only $5 million. And we'll come back to that in just a second. What's important is the alternative minimum tax, line 45. He was subject to that tax. I've been subject to it every year since it was enacted until 2018. And that is an add-on tax passed by Congress in 1986. What's important about it is that for real estate developers, not people like me, it is refundable. So that $31 million is not really money Donald Trump paid in taxes. It's money that Donald Trump advanced to the government interest-free for a year or two and then would get back. And then you'll see his total tax bill of $36.6 million in round numbers. Now, if we can go to the next page. There we go. This is the fundamental analysis of this. And here's what's important. Donald Trump's income of $153 million, his effective federal income tax rate, his regular federal income tax rate, is 3.48%, less than 3.5%. His effective tax rate for the poorest U.S. income taxpayers was higher than that. It was 3.51%. And yet those people's average income was $14,200 for the year. Donald's was $153 million. So while the U.S. in many ways has a progressive tax system, there are plenty of anomalies to this, and Donald Trump is a good example where very wealthy people pay little or no tax. And I also want to point out that the White House, when they verified the accuracy of the tax return that I had and put it out, they inflated the number. They claimed he paid $38 million in taxes because they added his share of his Medicare tax, which is not an income tax and is not appropriate. And yet most major news organizations, including the very best of them, the New York Times, where I used to work, repeated this number because most journalists tend to work from what they're told by sources, not independent review of documents. Now, if we can go to the next page, I've circled here his foreign tax credit. Trump had a foreign tax credit of almost $24,000. That tells us how much he paid in foreign taxes that year. We know from recent reporting in the New York Times, which got a hold of his tax information, not the actual returns, but information from the returns for most of the years of this century, that he has paid significantly more foreign tax since then, which tells us about his increased foreign activity compared to 2005. And of course, he gets to deduct the $24,000 from his overall tax bill. Now, if we go to the next page, I want to illustrate something about Donald's finances, which will help you understand the really smart presentation you're going to hear from Dan. The Scotsman newspaper reported last year that Donald Trump got a $110,000 basically subsidy from the government in Scotland. Trump, everywhere he can, seeks welfare. His first deal that he did, it was actually his father's deal that was converted into his to convert the derelict Commodore Hotel at Grand Central Station in Manhattan into the Grand Hyatt Hotel, included a tax abatement that, given rising values in New York over its 40-year life, looks to have a value in the neighborhood of $400 million. And Trump cheated on that. I have a chapter in my book, The Making of Donald Trump, about how he tried to hide records and pay $3 million less than he owed the city of New York one year. Auditors who would not be stopped pursued him through claims of a broken water pipe destroyed the records. And, oh, the records are actually on a computer in Chicago. And so when they flew to Chicago, they were told, oh, we accidentally erased them last night while getting ready for you. And ultimately found 7 of the 12 necessary ledger books, which had been stored in a warehouse in New Jersey, enough to establish that Trump was trying to cheat the government out of $3 million a year. This was on top of already getting this enormous welfare, this property tax abatement on his hotel. Well, he's tried to do the same thing in and successfully did in Scotland, although it was stopped the next year by lawmakers there. Now, if we go to the next page, you'll also see the pattern of Donald Trump in business. The membership of his Turberry golf course, which he has publicly said is worth $200 million, even though it's lost money every year since he bought it in 2014. And he has an internal loan that the last time he had to make a disclosure about it was at 117 million pounds, which is $140 million in round, $130 million in round US dollars. And you'll notice that membership in the club declined by about 13%, and the number of visits to the club declined 36%. This does not suggest that Donald Trump is particularly good as a businessman, and it fits exactly with what he did in Atlantic City, where other casino owners invested in upgrading their properties. They spent money to improve their software and customer service, and Donald Trump simply extracted cash as fast as he could until they got to the point where the casino regulators in New Jersey said, stop, you're taking too much money out. And so the last time I stayed at the Trump Plaza, which is now closed in a derelict building, there was chipped paint. It had old mattresses they had flipped over instead of buying new ones, and was just not at all the quality Trump claims, but that you don't find in any of his buildings as soon as you get out of the main public areas. Now, on the next page, here's his latest profit and loss statement. In the United Kingdom, privately owned companies must report what the British call their turnover. And it showed a revenue in 2018 of about 24.5 million in US dollars and a loss of 14.4 million. This is despite the US government subsidizing the place by having military flights stop and send people on a 2-hour shuttle ride to go stay at the hotel, visits by Trump and various other government officials. The US Secret Service alone spent, I think it's 25 or 50,000 British pounds staying at the property. He had promised the Scottish officials that he would create 6,000 jobs. Well, there are 77 jobs at Turberry, down from 83 or 84 the year before. And while he has a second smaller course, he's nowhere near the 6,000 jobs he promised, and he never will be. Now, the tax information on Donald Trump also includes a story I broke in 2016 that he has had 2 income tax fraud trials. These were both civil trials. And in those trials, he actually forged his own tax return. His longtime tax preparer, a CPA and tax lawyer named Jack Mitnick, testified that the tax return in evidence had his signature placed there with a photocopy machine, but it was not his signature and it was not the return that he had prepared. This is consistent with other behavior of Donald Trump. The Manhattan District Attorney, a state-level official in New York State, is working with a grand jury to investigate Trump. Once they obtain his actual federal tax returns, it will just be a matter of time until he is indicted. He will be prosecuted. He will no doubt try to get his trial moved to a rural area in Western New York, where I live, to get a more favorable jury. And despite that, I'm pretty confident that he should be convicted on bank, insurance, business records, and tax fraud when we finally see much of his returns. So with that, let me turn this over to Dan, and then we'll take questions after Dan's presentation.
All right, thanks so much, David. So David is really the premier expert on Trump's taxes and his income and how he's dodged all of this stuff. What I spend more of my time looking at is his assets and his liabilities. It won't surprise you that at Forbes, one of my perhaps unenviable jobs is to figure out twice a year how much Donald Trump is worth. And so that's the way that you got to figure out what he's worth. You count up the assets, you figure out what the liabilities are. So I'm going to take you through some of those numbers, and you'll see how those numbers really tell the story of Donald Trump as he currently stands, and potentially the story of Donald Trump over the next few years. So we'll just start with the assets. Figuring out how rich somebody is really isn't all that complicated. You just got to count up everything. So Trump, he likes to make it sound like his business is super complex, like he's got, all this different stuff. There are hundreds of businesses all over the world. It's really not actually that complex. There might be hundreds of companies, but that doesn't necessarily mean that there are hundreds of actual real businesses. So as you look at this chart here, you can see what the most valuable holdings are in Trump's portfolio. And some of them might surprise you. So the first two are 1290 Avenue of the Americas and 555 California Street. Now, these are two anonymously named buildings that nobody ever really talks about because Trump only owns a 30% stake in them, and they're kind of boring buildings. But when you look at the amount of profits that these buildings are throwing off, the amount of square footage that they have, even though Trump only has a 30% stake in them, those 30% stakes are worth more than any of his other 100% stakes that he owns in anything else. So if you go down a little bit further, you'll notice that 40 Wall Street is up here at the top. 40 Wall Street, of course, is a large office building in New York City. And so you can start to see these three most valuable assets are all big office buildings, not the sort of flashy hotels and fancy golf courses and that sort of stuff that you hear so much about. But they're these sort of boring, big office towers that just generate a ton of rent and make Donald Trump a lot of profit, and therefore are worth a tremendous amount of money if somebody else would want to buy them. So if we move along here, we're going to go to his debt. Now, Trump has over $1 billion of debt, and you can see what assets that debt is held against. Again, you'll notice that 1290 Avenue of the Americas and 555 California Street have some of his largest loans. That makes sense because they're his most valuable holdings. You'll also notice, however, that there are a couple other properties that have big loans. So the DC Hotel, you can see there has the second largest loan. And then if you look a couple more over, there's Doral and then Trump Chicago. Now, when you add up those two slides, you can see what the net worth is. You take somebody's assets, you subtract their liabilities, and you can see what their net worth is. Now, here's where you can really tell where Donald Trump is in a great position and where he's really in trouble. So again, if you look here on the two most valuable assets that he holds after accounting for debt, you still are looking at 555 California Street and 1290 Avenue of the Americas. An important thing to know about those is that he only owns 30%, and so he doesn't actually control them. That's part of why they've done so well. Neither of them are branded with the Trump name, and so they don't have any of that sort of tarnish on them. In fact, many of the tenants don't even know that they're paying rent to Donald Trump. But nonetheless, they are, or at least 30% of their rent is going to Donald Trump, which adds up to a tremendous amount of money. The other important thing here is that you can see that that's where his equity is in those two buildings, but he can't control when he gets it out. The company that controls when it comes out is Vornado Realty Trust, which is a publicly traded real estate firm. And so if he wants to extract that cash, if he wants to do what David was describing that he did in Atlantic City and start yanking out cash and stop reinvesting in the assets and take that money and stick it into other ventures that he wants to pursue, like, for example, his golf ventures, he can't do that. And so that's both a good thing for Trump because it saves him from his worst impulses, but it's also a difficult thing for Trump because he can't pull that cash when he needs to pull it. If you look a little bit further down, you can see a couple of towers that look basically entirely gray. That's a really, really bad sign for Trump. That means that he has large amounts of debt and almost no equity in those holdings. So you can see, for instance, the DC Hotel and the Trump Hotel in Chicago. Those are two hotels that you see a lot about in the press, and people might think, oh, Donald Trump is really, these are big money makers for Trump. Well, they would be small money makers for him if he didn't have large loans against them. But he does have large loans against them, and the interest expenses at those properties chew up any profits that he's making. So his office portfolio is actually in fine shape. His hotel portfolio, not so much. His golf portfolio doesn't have nearly as much debt against it, but it's been a huge waste of money. All you need to do is just look at the slides that David was showing you about the profitability of those courses to tell that Trump's investments there haven't borne much fruit for him. This gives you sort of an aerial view of Trump's fortune. Again, there's a lot of talk about what he owns, but fundamentally, he's still a New York City real estate guy. It's not the majority of his fortune, but it's pretty close to it. And you can see that non-New York City real estate, and a big chunk of that is at 555 California building out in San Francisco. His cash and his personal assets are not very significant. They add up to about $300 million. Of that, though, the cash is only about $160 million. So he's not really that liquid. He might be worth $2.5 billion, but if you only have $160 million in cash, that doesn't mean that you can necessarily pay off all of your loans with ease, or even pay off big tax penalties, or even run a business with much ease, or make big investments in the future. Trump likes to talk about his brand a lot. If you look at the numbers, it's unclear why he likes to talk about that brand a lot. This has always been a small part of his business. What we value as his branding businesses are things like licensing deals overseas, product licensing, which he used to do and now no longer can. There's a shrinking part of his business that's never been big, but because it's hard to capture, Trump likes to put some crazy number on it and say that it's worth $3 billion or whatever, and therefore he's worth a tremendous amount more. So why does all this matter? We're looking at these numbers, but who really cares? Well, the first thing is that there are some legal implications here. This is a statement of financial condition, which is something that the Trump Organization has put together over the years. And this particular one, according to Michael Cohen, I wasn't receiving the files at this point, but was sent to both Forbes and also to Deutsche Bank when Trump was trying to get loans to buy the Buffalo Bills. And what you'll notice when you look at this is one line in particular: mansion at Seven Springs, Bedford, New York, $291 million. Now, this is a good example of the sort of math that Trump likes to play with his assets. He bought that mansion in 1995 for $7.5 million. He did not do any development on it. He tried really, really hard. He wanted to do a golf course with a bunch of mansions and that sort of stuff, but he never actually got clearance to do it, and he never actually did it. And despite all that, 17 years after he buys the place, he claims that it's worth $291 million, or about $291.5 million more than he paid for it. Obviously, it's not worth that much. There was no change in the property that would justify that. But Trump nonetheless put it on his statement and sent it to not only Forbes, which is just kind of funny, but also to his bankers, which could provide some trouble for him. You're not allowed to lie to your bankers. This is what they ended up abandoning the plan to develop all these mansions and the golf courses and all the rest. And they decided that they were just going to, in fact, donate a lot of the land next to that mansion and take a big tax write-off for it. So in order to do that, they needed to get Seven Springs appraised. And Cushman Wakefield came in and did an appraisal of the property and determined that they thought that it was worth, according to this filing from the New York State Attorney General, $56.5 million. So you can tell that's, again, another indication that we're a long, long way from that $291 million that Trump claimed. And they said that the easement, the amount that he was donating, was worth $21.1 million. So that, I guess, takes your net number to about $35 million or so that they think it's worth right now. I think that that's probably slightly aggressive, but I'm not going to bicker with them too much about it. We have the $30 million. Anyways, it's a nice house. Now, why does his debt matter? Well, the debt, believe it or not, can actually help you tell the future of Donald Trump. And I just want to sort of take you through a timeline here of what Trump's going to have going on in the next 4 years now that he's no longer going to be president. So in 2021, just around the corner, in January, he's going to leave office. He's going to board Marine One and perhaps Air Force One, we'll see, and leave the White House. In September, one of his first major loans comes due. It's the one on 555 California Street, but you'll remember that he doesn't control what to do with that loan. That's ultimately up to Vornado. Nonetheless, it's a significant amount of money, his 30% chunk of it, which he does not have personally guaranteed, but nonetheless will be extracted from his equity there, it adds up to about $162 million. He should be fine in paying that one. 2021, it'll be a bad year for him because he has to leave the White House, but financially he should be okay. 2022, he's got a loan coming due against Trump Tower in September. Again, he should be okay here. This is a $100 million loan. It's an interest-only loan, and he should be able to refinance that loan. Trump Tower throws off net operating income of about $13 or $14 million a year. Most lenders would probably give somebody a loan on something like that. Even somebody like Donald Trump, they might just charge him a lot more money to do it than they would other folks. In November, he's got the second half of that partnership one that's coming due, 1290 Avenue of the Americas. That, again, will be fine. Then things start heating up. People are looking forward to the 2024 election, and Donald Trump has a $125 million mortgage against Doraus Golf Resort in Florida coming due. This resort has been a total disaster for Trump. He bought it for $150 million. He put $213 million into it. That adds up to $363 million. We now calculated that it's worth $153 million. That's $210 million down the tubes. It's unlikely that another lender would come in and give him a big loan like Deutsche Bank did. And to further complicate matters, this one's personally guaranteed. So if he can't pay it back, they'll just take his stuff. 2024, things get even more intense. He's got a $13 million mortgage against Trump Plaza. This is not the Trump Plaza that David was referring to, but a different Trump Plaza. He likes to name his things similarly. This one's on 3rd Avenue in New York City. And then he also has two other loans with Deutsche Bank, $170 million against the DC Hotel and $45 million against the Chicago ones. Both of these properties are bleeding money. It's going to be difficult for him to refinance these. He's going to have to sell stuff to pay him back. He might have to refinance a little bit of it. It seems very hard to imagine that lenders are going to be eager to loan against these properties. And right at this time, when he needs all this cash to come up with, is when the United States is going to be having the 2024 presidential election, which he, of course, has floated rumors that he might be interested in pursuing. And if so, he'll probably have to pursue a different strategy than he did in 2016, when he came in and announced that he was so rich that he could not be corrupted, and therefore he was going to pay for all of his own presidential ambitions. He's already showed that he's done with that model in 2020. He hasn't put in any of his own money, but he certainly doesn't seem likely to do that in 2024 with all these debts coming due. And so now we'll open it up for questions. Fire away, and David and I will gladly answer. I guess maybe I can start with the first question for you, David, if you can hear me. So my question is, you've been covering him for a lot longer than I have, and there are a lot of parallels that we can see from Trump's business career through his presidential career, and perhaps through his presidential career. But how do you think, if at all, he has changed over the years?
I'm sorry. I had my mute button on. It's a good question. It's a good question. Donald and I are about the same age. He's a little bit older than I am. And so I've thought about this a lot. How I've changed. And the biggest change I've seen in Donald is a significant decline in his cognitive capacity. Donald's not very smart. He claims to be this great genius, but he's not. I've had many conversations to tie down. Does he know things? And it used to be that he could follow a somewhat complicated conversation, but he clearly cannot do that these days. In terms of his behavior, nothing is that was molded in childhood. He had this father measured everything by did you win? You got the money or you won the contest. No matter how you did it, cheating, so what? You won. He has become less capable of keeping his lies straight. And one of the things about the presentation you did and the numbers is some of those are numbers, as you pointed out, with the Seven Springs mansion that are what he claimed to be worth. he also often leans on people to give him values that he wants. So if the Cushman Wakefield appraisers were put under oath, I'm pretty sure they would say that he said, no, that's not a high enough value. 56 million, they originally maybe said 30 or 35. The Eastman, it's probably worth 10. Well, no, that's not enough. And he gets people by pressure to do things they shouldn't do instead of saying fine, walking away from the business. And
I can assure you from personal experience that he is quite aggressive about pushing up the value of every single thing in his portfolio. And it's tricky to catch all of them.
You've gotten the full Donald treatment from him. But it's fundamental to what he does. Now, there is a question pending about why does Deutsche Bank lend him so much money? And the first answer to that is it's a mystery. We really don't know. The question that many of us have had for a long time is whether Deutsche Bank has engaged in a back-to-back lending deal. And to make that simple to understand, let's say I wanted to loan one of my kids. One of my kids wants to start a business and they need $1 million. And I could give them the $1 million or loan it to them, but I don't want to do that. So I go to my banker, where I'm a really good customer because I'm a billionaire. This is obviously I'm not. And I say, listen, loan my son Dan over here the $1 million. I'm going to deposit a letter of credit with you or some other instrument worth $900,000 of that. And if he doesn't perform, you can collect from me. Now there's no public record connecting us. We know that Deutsche Bank is the preferred bank for laundering illicit Russian money. The second preferred bank is the Bank of Cyprus, which had two vice chairmen on its board in 2016. One was an appointee of Vladimir Putin, and the other was Wilbur Ross, Donald Trump's banker friend who became Commerce Secretary. It is also possible that there is no backup loan, that Deutsche Bank simply saw opportunity in making money off of Donald Trump, and they made a very bad bet. And we're not going to know until litigation brings to the fore what went on there. But the fact that they loaned him money when other people would not, I think is highly significant. And the fact that when he tried to get out of his $40 million loan in Chicago hotel in 2008, that a Russian oligarch who previously had been arrested and held for a year by Putin and who had been, quote unquote, fined $200 million plus by Putin, basically for disobeying the boss of that gang, suddenly bought from Donald a piece of property for 3 times what it was worth in Palm Beach. It certainly suggests that there's some illicit relationship in the background we haven't seen between Donald Trump and Russian criminals. And when I say Russian criminals, I mean the oligarchs. They basically stole the property of the old Soviet Union, and they are the best funded, biggest financially criminal gang in the world.
I want to weigh in a little bit on the Deutsche Bank stuff too. You know, I think that sometimes people underestimate how desperate bankers are to get new big business. And when Deutsche Bank began its relationship with Trump, they did not have a large commercial real estate lending arm in the United States, but they were trying really, really hard to develop one. And so they made a couple of big loans to him, one on 40 Wall Street. They ended up lending him a bunch of money at Trump World Tower over on the east side of Manhattan. And from what I've heard, they actually did just fine on those loans. The turning point was, as David described, when Trump's tower in Chicago, which was probably the most ambitious project he's ever done, opened up right in the middle of the recession. And suddenly Deutsche Bank was caught. And Trump didn't have the money to pay him back. Trump actually sued them and claimed that they owed him $3 billion for causing the Great Recession, to which, the judges basically laughed him out of court. But part of the resolution here was that he got another loan from a different arm of Deutsche Bank. And the key thing here is that the different arm of Deutsche Bank was willing to take very large personal guarantees. So before it had been small personal guarantees. He would guarantee $40 million on a $640 million loan, something like that. Later, he's guaranteeing the entire thing. And Deutsche Bank is basically saying, we hope that he's going to be able to pay us back, and we think that he will be able to. And they miscalculated on those. These properties have not done nearly as they thought that they would. They're in a lot of trouble. But fortunately for them, they do have recourse here, which is that they can go after his other assets. And that litigation that David is predicting, we'll talk more about it in 2023, 2024, when some of those loans come due. I mean, this is very likely to get messy. But I think that Deutsche Bank, if they are aggressive enough, will get their money back. Trump's lenders have not always been aggressive enough to get their money back. So we'll see how it plays out.
Yeah, I agree with you, Dan, about that. And so long as he's president, no one would move to foreclose on him because he controls the banking apparatus in the country, which is in itself corrupt. Now, we have another question about what about the criminal investigations, are they state or federal? Well, Donald is the unindicted individual one in the crimes Michael Cohen confessed to and said were done at the direction of individual one, that is Donald Trump. So once Trump is out of office, it is possible that federal prosecutors in the Southern District of New York will instate him as a defendant in that case. That's going to cause various political problems for Joe Biden, so that may not happen. The Manhattan District Attorney is a county official. The counties are creatures of the state in the United States, the state level government. So that's a criminal investigation into bank, insurance, business records, and tax fraud. The State Attorney General of New York, Letitia James, a Cuomo ally who was elected on a promise to investigate Donald Trump, has a civil investigation underway. And what I read between the lines in that case is that it may morph into a criminal case, a New York State RICO case. The federal government has a racketeering statute. New York has a similar statute with slightly tougher burdens for prosecutors. They wouldn't be significant in this case. I'm sure that the reason Donald Trump's younger or middle son, Eric, tried to get out of testifying in that civil proceeding was he had been counseled by his lawyers that this could turn into a criminal matter and he needed to be concerned about it. I've talked to a number of criminal defense lawyers who all say they would have absolutely warned him about the criminal liability in that civil litigation. There may be additional, well, in the Attorney General of the city of Washington, D.C., also has a case over what the heck happened with the $107 million raised for the inaugural, which was a low budget affair. Classic Donald Trump, looks glitzy, but it isn't. That cost a small fraction of what Obama did for less than half that amount of money 8 years earlier, even when you adjust for inflation. So that's another case. And then there are a number of women pursuing civil cases against him, alleging sexual assault, defamation, and other things. The most important of those will probably turn out to be E. Jean Carroll, a well-known writer in New York. At one time, I think she was the chief writer at Saturday Night Live, the 46-year-old TV show in America. And she's seeking his DNA to prove that he raped her in Bloomingdale's department store in a dressing room when almost nobody was around. And she kept the dress like Monica Lewinsky. So far, Donald has avoided producing his DNA. So do you want to say anything about Dan, or do you want to go to the other question we have pending?
Well, just one quick note on that. I think that, there's been a lot of talk about Trump's future and how that revolves around his finances and his legal problems coming out of office. And I think it can be tempting to think that all of those things necessarily move in the same direction. That when you get into more legal trouble, you get into more financial trouble. And that oftentimes is the case. But remember, Donald Trump has recently raised a tremendous amount of money, which he could presumably use some of to fight some legal cases that would, of course, be unconventional, but that's the way he has done things in the past. Not that he necessarily would be able to foot the entire bill. And the other thing is that, post-presidencies can be extraordinarily lucrative. And now he's got the opportunity to make money as a celebrity. He's already shown that he can do that. Bill and Hillary Clinton made over $240 million from 2001 to 2015. That sort of cash injection for Trump would be something, similar to like what The Apprentice was for him before he became a political figure. So I actually think that that his post-presidency and that losing might be good for his business, even if it's bad for his criminal liability.
Yeah, I agree with Dan about that. And that goes to the pending question about, can he use this $217 million that he's raised post-election? Yes, he can. He has to spend some of it on litigation to overturn the election, where I think the current count is 0 to 46. They've lost every case. But once he's done that, he's pretty free to use that money to subsidize his lifestyle, to pay lawyers. The fact that he could raise that much money, mostly it appears from small donations in such a short period of time, tells you that he's going to, in all likelihood, be able to continue to raise a lot of money going forward. And so while I think he's going to have tremendous legal bills and his life is going to be miserably tied up in litigation everywhere and depositions, and he will no doubt go to court saying, this is just unfair that I have to do this much of this, please, free me of some of these. He will, I don't think he's going to have trouble financing those things. He may run into a problem that lawyers want to be paid up front. Donald has a long history of not paying his bills, walking away from his bills. In fact, right now his campaign owes millions of dollars to various cities where he held campaign rallies over the last 4 years and never paid for the security for them. The police, one of the things we'll be looking for after he's out of office is whether he paid in full the amount of money he's supposed to for his personal use of Air Force One. We need to spend whatever we have to spend on the security of the President of the United States. It's not fair, as happened to Obama and happened to George W. Bush, to say taxpayers are spending all this money so you can go play golf somewhere. But you do have to pay for your flight, and you are charged. The last time I looked, you were charged twice first-class airfare. I don't know if the regulations on that were changed, but even if it was just first-class airfare, did he actually pay that money over as he's required to do? And why will I not be shocked if we find out that the last billing period, Donald didn't fulfill his obligations?
I think one of the... Go ahead, David, sorry.
No, that's all.
Well, I was just going to say, I think one of the fascinating things about Trump that's it is endlessly amazing is, he does have real assets, and he is actually rich, and he does have a lot of money flowing through his businesses. But these small amounts of money, whether it's twice the price of first-class airfare, ooh, big deal. This is a guy who's worth $2.5 billion. Or whether it's, funding his own campaign in 2020. He not only did he not put any of his own money, but he then used other people's money, these small donations that had come in from all around the country, to then do things like pay rent at Trump Tower every month and lease a little T-shirt booth in the bottom of the atrium and rent what appears to be an apartment that it's not really clear if they used a few blocks away from Trump Tower. All these tiny amounts of money that it adds up to a few $million, and you say, couldn't a guy worth $2.5 billion just cover it? Just at the very least, so that then people like us weren't writing about it. From a PR perspective, wouldn't that be worth it to make it clear that you're not taking money from your supporters, or as David pointed out, that you're not nickel and diming your trips on Air Force One. But Trump has a history of caring an unusual amount about these small amounts of money.
Yeah, he does. And he gets that from his father, who famously at construction sites would pick up nails, which anybody building with wood has nails all over the place on the ground, and give them back to the carpenters and say, make use of these. So we're down to less than a half a minute to go. Dan, thank you. And I hope people follow Dan's work and get his book, which really is a superb job of examining his assets and liabilities, even if I think you guys are generous with your interpretation of the value of his assets. It really is an excellent job of doing that. And maybe we'll see you next year.
Thanks so much. And thank you, David. I'm looking forward to reading your next one.
Thanks for watching. Consider subscribing to our investigative news and documents service and attending our events. For more information, visit offshorealert.com.